One of the most difficult parts in any divorce case with a business is determining the value of that business. A lot of people say, well, the business makes all this money. Isn't that the value? And the answer is no. Or you watch Shark Tank and you see them doing 5x of revenue or, 3x of net proceeds. No, that's not how it works either. There are two different kinds of value within a business. One is the actual value of the business itself. To determine that, you must bring in a forensic CPA to conduct a business valuation. That business will then have to provide all of their bank statements so we can see, and the court can see, what they earn, but what their expenses are. It's not fair to look at a business and say, well, their gross revenue, the money they made last year is $1 million, therefore the business made $1 million. But that's just not true. There's staff, there's contractors, there's rent, there's car payments, there's a bunch of expenses that must come off. The other part of value is goodwill. For example, if it is Joe Smith Handyman and Joe Smith has no employees, and the only reason people call are because Joe Smith will be there, it could be that the business has no value because without Joe Smith, there is no value. And that's true with a lot of solo run businesses. So again, even if that business has value, because Joe Smith is there, we have to look at what the business value would be like if Joe Smith was not. Otherwise, it's all goodwill and the business has no value. Most importantly, whatever you do, do not let your lawyer or do not forget yourself to join the business as a party to the case. If you don't know what that means, and you probably don't, call a lawyer. They will or should.